We're off to Button Moon and we follow Mr. Spoon Button Moon. Well, do you follow a spoon with the vision of La La Land? And a warm welcome to one and all. If this is your first time here, I am the vocal talent, in inverted commas, Scruffy Trader. And it must be true. It says so, right here. And it's Saturday, so it must be coffee with Scruff. And talking of coffee, here it comes. Fantastic with my best friend Winky, Wonder Wink, who has definitely made my week this week. And why? She's done it, boys and girls. She's done it. She's gone and got one. Oh, I'm having a moment.
Well, hello. Ding dong.
That was a good moment. I can't wait till we go on holiday next week. Fantastic. And why? Well, deserve it. It's been a hard few years for all of us with world events, and it's nice that we can start doing normality of sorts. Apart from on this channel, because nothing's normal on this channel. But what it is grounded and real world. Because when you see me trade, I trade in the moment.
No way!
And I do show statements and various bits and pieces. And, well, in fact, I'm going to show you a prop firm a bit later. And just so you've got credence as to, I know what I'm talking about. Here's three of them. But what am I bashing on about today? Why was I thinking of the moon and spoons, which was a strange song to be singing? Well, most people on YouTube follow what us in the North would call a spoon. An idiot, twit, moron. Why? Because they are trying to sell you a Fazagi. You know, it doesn't exist. It's not there. I mean, you've got the animated fella. All right, he's been around for a long time and he knows his stuff. But his catch thing is, can you make 500 quid in the markets a day? Well, you can, but there's other elements that miss out. I was watching one this morning. The only strategy you need to make $1,000 a day. Again, they're missing something out. And it's something called margin.
Are you serious?
And it's how much it costs you to go into the market. Because if you come into YouTube and you think that you've got maybe 50 quid or 200 pounds and you're going to make $1 million or 500 a day for that matter, you will be the best trader on the planet if you can do it. It is absolute horseshit. Absolutely. I'm going to show you it with figures, but I'm also going to show you a way that it can be feasible to a degree, but it's still hard because you've got to know what you're doing in the first place. Let me show you. So if you can imagine that you are looking at a basic market. Now this is Euro USD. I pick on that because it's the biggest market and everybody knows it. Okay, let me just move my head out of the way a second. It's a pounder point that you can see. Now the bit that I want to draw attention to is the bottom piece down here. Let me show you. Down here, 346.69. What's that got to do with the price of bread? You need a certain amount of money in your account just to open up a position. All right? You can't just rock up and go, well, I've got 50 quid and I'm going to open a £25 position. Don't work that way. You've got to put up a little bit of collateral. And that's what margin is. It's kind of a deposit to borrow some money from the market, and that's what your leverage is. So if you're 10 times leverage, it will be 10 times your margin sort of thing. It's a kind of a watered version of it. But just to open £1 a point will cost you £346.
You're taller than I imagined.
I'm bigger in every department.
So where am I going with this? Well, let me show you something.
Well, we're waiting.
Okay, boys and girls. So I've just said margin is 346. Remember that number. Okay? Why is it important? Because it's how much money you need in order to achieve your goal. So if you're looking for 500 a day on the Euro USD, which is the biggest market, it's very liquid and it's one of the ones that they boast about, and it is cheap. It is really cheap in terms of margin to get in. If you're only on £1 a point because all you have is maybe 400 to 500 pounds, dollars, whatever, that's as much as your position can be. So to do 500 a day, as they quote, you have to do 500 pips. That ain't happening. Not at all. But what about this? Well, maybe I've got £2. Can you do 250 pips off euro dollar a day? No. I'm going to show you this in just a second. £4, 125. £5, 100 pips. It's not impossible if you can catch the very top, the very bottom, but that is nigh on impossible. £10 at 50 pips, getting there. But you need £25 per point and do 20 pips a day. Because when I watch the little program and the things, they say it's 20 pips. If you do 20 pips a day, it'll get you £500 a day in profit. Right, okay. Well, that means my margin has to cope with £25 a pip. Well, how much is that? Well, let's have a look. We know £1 is 346. So 346 times 25. Just to open up your position, and I mean just to open it, you need 8,650 in your account. But it's worse than that, because that just opens the position. What if the market moves against you? You have got nowhere to go. And if you're working on sort of basic maths and one thing and another, you need double that in your account to allow it to grow. In fact, if you start going out and out, you need 4 and 5 times that just to let it grow. Okay, so suddenly this, if you say times by 4, you need 35k to safely open up that position at £25 a point. It's a lot of money, and it's money that they don't talk about. Why? Because it'll scare you, and if you're scared, you won't buy their course, or you won't buy their wonder system. And then you have the clowns out there that talk about wonder systems. Oh, I'm just going to use a prop firm, and with a prop firm I'll have like 10 accounts, and I'll clone one to the next. Well, they're living in la la land as well, because if you screw one, you screw them all. Stupid. Spread out your portfolio. Let me jump back down onto the screen a second, and I'm going to show you why these are unattainable. Okay, guys, so let me just jump back onto the euro dollar chart. Now, we saw the margin. Don't need that anymore. Why have I come back here? Because the market can actually tell you how far it's going to move in a day. You know, I know you scratch your head and go, whoa, hold on, Scruff. How can the market say it's going, how far it's going? Well, it can give you a clue, shall we say. And it's an indicator. and that indicator is called the ATR. Now, all platforms have it. It's called the average true range, and basically it is an average set over a certain amount of candles, in this case last 14 days, takes an average, and it'll tell you how far it's moving in said time period. Well, if we look at this one, it's currently what, 89.90 per day. So it's already telling us how far it's going to move. Now, on the board, when I was showing the figures, you had to do 500 pips, 250 pips, 125 pips at certain price points. So again, what you're looking at when you're on the charts is your margin, and your margin will determine how big your position size is, and the position size will determine how many pips you need in order to hit your target. Now, when you see the various YouTubers and around and they're saying, oh, you're definitely going to make this, well, one, they're assuming that you know how to trade in the first place, and let's be honest, if you look at the statistics from various brokers, 70 to 90% don't. So you're already against a brick wall. The ones who don't succeed normally have a small balance, and they seem to be under the impression, because they see it all the time, you're going to turn 200 quid into a living wage. It's just not happening. You know, it really isn't. I'm not saying you can't grow your 200 quid, because of course you can, but you have to be realistic. It takes money to make money. Now, on that ATR of 90, that is the breadth of market. What's the chances of you timing the very top and the very bottom? It's almost impossible, because the markets are dynamic, moving all the time. And that's kind of where my rule of three comes from. I'm using the bottom third to get in, I'm using the top third to get out, and I'm looking for the bit in the middle, which is another third. So in this case, I'm looking for a range of about 30 pips of profit. Now, I'm more conservative than that, because I half that as well. So it's actually about 15 that I'm looking for in that market I've just shown you. And that'll present itself maybe once or twice a day. So I've got maybe 2 bites of the cherry. So I need a big bank balance to cover that. Now, you may well be a high worth individual and you're able to put in sort of 30 to 50,000 into an account. And great, then you can trade your 20, 30 pound a point quite easily. You know, you've got a 50k account, it's not difficult, you know. And the bigger the account, the easier it is to trade. Why? Because you can ride the noise out. You're not frightened of margin calls. And if it goes against you, it's just a number on the screen. You know, and it's all about the head game and how good you are. Business owners that have a decent business are normally better at it than somebody who works in a factory. Why? Because the person who works in a factory counts their pennies all the time. And if they see the market move against them, they'll be frightened and they'll pull it. Why? Because they don't want to lose the money. So 100 quid against them is a big deal. But what they're actually doing is cutting the trade probably short, because they'll have the stops in too tight. And likewise, when it runs for them, again, £100 a lot of money, so they'll snatch it when actually it might have ran to 200 quid. So the mindset is a big thing as well. So how do you combat this? Well, there's a couple of ways, because if you are going into market, you can either sort of put your money into a broker, and this is broker of choice. They use web platforms like you see me use all the time. They use MT platforms. They've got both MT 4 and 5. Personally, I prefer 5. But what these can do is they have a leverage. Well, that gives you more buying power. So that is one way to ramp up into a bigger position. The danger with it is, if you've still got a small account, it'll not take long to eat that account. So you still need money in it to survive. But it gives you the ability to use it if you want. And then, of course, the reason I like it is cheap spreads. They've got God knows how many platforms, and there is a lot of education with these guys. And in fact, if you put some money into it, a reasonable amount, and trade it, I'll give you some time. Can't be any fairer than that. Find a link for it in the description below. Now, there's another way as well. You can use a prop firm, which is why I showed you the statements earlier on. Now, a prop firm can put the money up for you to go into market, and you either do a profit split, or in the case of the 5%ers, which is who I trade for, they will put all the money up and you keep all of the profit. And you scratch your head and go, how does that work? It's very simple. It's two accounts. That whatever you do in your account is cloned into another account. They keep what's in theirs and you keep what's in yours. Very, very simple. Now, what they've done, and it's kind of where this is all coming to, they know that money is a problem. And if you're in some of the other programs, for argument's sake, they're pretty cheap to get into them, and they're on 50-50 splits. However, you have a drawdown in them, okay? And that drawdown can be eaten in your account very quickly, okay? So essentially what happens is your funding is the leverage and your drawdown is the account. And they recognize this, and they created what's called a freestyle. So if you do only have sort of less than $1,000 or whatever to go to market, as I've just shown on the board, it isn't going to go very far. So what you're doing there is you're just grinding away and growing it. But if you want to accelerate it, and you know what you're doing, because that's the other part, you must know what you're doing, you can take freestyle. Now, freestyle, you have either 25 or a 50k, but there ain't a drawdown in the evaluation. You can use the whole bloody thing. So you essentially do have a 50k account, which means you can put your position in 20 quid or 25 pounds, do your 20 pips, and get your 500 quid a day. What are the catches behind it? Well, you've got to be performance led all the time. And performance led means you can't just go to the market and piss the money up the wind. No. You've got to have so many winning trades. Now, we know that win rate's important. I am a believer that if you have less than 50% win rate, you're gambling. Over 50%, you have a little bit of an edge. Then you come down to your money management side. So if you've got that edge and money management, it's a slam dunk. It really is. And what's money management? Well, basically your profit outweighs your loss. That's simple. And they are looking at a performance factor of 2 to 1. So your profits need to outweigh your losses. Simple stuff, you know, and you can't get it any fairer than that. Now, one of the things people pull up about, go, it's only 1 to 30 leverage. Yeah, so what's wrong with that? Nothing at all. The uneducated think leverage is the be all and end all. It's not. Leverage is just a tool that you use to get to your goal. The lower the leverage, the better. You're better off having a bigger bank account and lower leverage than a small bank account and huge leverage, because you'll never be able to ride the storm out with high leverages. And that's just, it's just maths. So it was really give you something to think about. And when I see all of these glossy videos saying I have the perfect strategy, no, you don't. Nobody does, you know. Why? Well, think of it this way. You know, I was asked the other day about EAs. I don't like EAs, robots. I really don't. And I've spoken to a number of people about this, and we're kind of all of the similar sort of persuasion, shall we say. If you have a fantastic robot, why are you selling it for 50 quid? Because Goldman Sachs would pay millions for it if it's as good as what you say it is. The next part of the puzzle to this is, if it is that good algorithms, and don't get me wrong, in the future they may well be, because artificial intelligence is getting stronger every day. But at this moment in time, every bank employs a floor of traders. Why? Because it's the human brain that makes the decision. If it was a robot, there would be one trader and 100 computers, not one platform and 100 traders. Kind of makes sense. That's the way I look at it anyway. And let's be honest, when you see the black swan events that's coming around the world, robots will never ever be able to anticipate them. Why? Because they look at logical ways of getting in and out of the market. The human brain ain't logical, and the old saying goes, the market will be erratic longer than you're solvent. So again, it's something to think about. Anyway, so the next time you see somebody saying how to make 1,000 a day, they might do it, but think about the maths behind it. You know, I've got a good size account and I do 200 to 300 quid a day. That's it. And I'll pit my skill against any of them lot any day of the week, any day. The only advice I can give you is be sensible. Less is more. The more you're in the market, the more you're at risk. If you can time your 20 pips and size accordingly, you'll be paid 100 times better than a scalper trying to be in and out the market 100 times in a day. Infinitely. So, happy days. Something for you to think about anyway. Cherish your thoughts. Drop it in the comments below. I answer every single one of them. And all my contact details are in the descriptions below. And if you want to try the prop firm, there is a 5% discount in the link as well. Just click on the link and you get 5% off your fee to get in. Stretch your pennies out. So as always, guys, trade well, keep your risk managed, live in the real world, but above all, do what you love, and the money will follow. See you all in the next one.